My name is Josh Zweig and welcome to a sample FreshBooks course module. Today, many businesses work across different provinces or different states, and each state or province may have their own rules when it comes to sales tax. When you send out an invoice, you may have to adjust the sales tax on that invoice depending on where your client or customer is located. Luckily, FreshBooks makes this process very simple. We're going to look at setting up the sales tax rates within FreshBooks, then applying those sales tax rates to an invoice like this one to ensure you're charging your customer the right sales tax amount. Let's first start with setting up the sales tax rates within FreshBooks. If you recall from an earlier module, we can change the settings of the organization by clicking in the top right-hand corner where it says Settings. For sales tax, click on the Taxes option in the middle of the screen. Here you'll have three columns to look at: the name, the rate, and the number/ID. The name is the name of the sales tax, like the GST or VAT. The rate is the actual rate of that tax or percentage, and the number is the government-issued tax ID that you've got from the tax authorities. So let's put in some sample tax amounts here. We'll put in the VAT at 5%, put in the sample tax number there. We'll put in the GST or general sales tax at 5%. We'll add the harmonized sales tax in the province of Ontario at 13%. We'll add a provincial sales tax as well in BC at 7%. To lock in these sales tax amounts, click on Save. To ensure the amounts are correct, you might have to do some research on your own or talk to an accountant because you want to make sure that you're charging your customers the correct sales tax amount. Once we set up the sales tax amounts within FreshBooks, we can now create the sample invoice. Again, from an earlier module, you recall to get to the invoice screen, we click on Invoices, and then the big green button, New Invoice. We're now at the invoicing screen where we can create a sample invoice. If we're making invoice to Elaine Enterprises, who's based in the United States, we'll know, being a Canadian entity, that we don't have to issue any sales tax. So when we create a sample invoice here, at our rate of $500 or $100 for 5 hours, FreshBooks automatically calculates the total to be $500 that's the balance owing, with no sales tax. But suppose we need to charge sales tax to a client that's based in Canada. Let's pick a different client, like Kramer Enterprises. Kramer Enterprises is located in Toronto, Ontario, and we know we need to charge a 13% sales tax, the harmonized sales tax in Ontario. Using the tax column here, select the tax rate that applies to that particular client. We selected the harmonized sales tax, which is a 13% amount, and FreshBooks automatically calculates that amount and applies it to the customer. If we had a more complicated case like Vandalay Enterprises, they're located in BC and in fact need two different sales tax amounts, a GST and a PST. Changing the GST on the first tax column, FreshBooks will automatically calculate the 5%, but using the second tax column, we can add another tax rate, and FreshBooks automatically calculates the 7% and adds it to the original cost of the invoice. Finally, we've got the final balance here, the $560, which reflects both the GST and PST. Sending the invoicing by mail, we can finalize that invoice, and our customer will receive the invoice with the correct sales tax amount. Happy invoicing!